Hey everyone, and welcome to Bharat Share Bazaar. In today's video, we're going to be talking about mutual funds. Mutual funds are a great way to invest in the stock market, even if you're a beginner. They're easy to understand and manage, and they offer a variety of benefits. What are mutual funds? A mutual fund is a collective investment vehicle that pools money from many investors and invests it in a variety of assets, such as stocks, bonds, and money market instruments. Mutual funds are managed by professional fund managers who make investment decisions on behalf of the investors. How do mutual funds work? When you invest in a mutual fund, you buy units of the fund. The value of each unit is determined by the net asset value, NAV, of the fund. The NAV is calculated at the end of each trading day by dividing the total value of the fund's assets by the number of units outstanding. Benefits of investing in mutual funds. There are many benefits to investing in mutual funds. Here are a few of the most important ones. Diversification. Mutual funds offer investors a way to diversify their portfolios. By investing in a mutual fund, you are essentially investing in a basket of different assets. This helps to reduce your risk if one particular asset underperforms. Professional management. Mutual funds are managed by professional fund managers who have expertise in the stock market. This gives you peace of mind knowing that your money is being invested by someone who knows what they're doing. Liquidity. Mutual funds are highly liquid investments. This means that you can sell your units at any time and get your money back. Affordability. Mutual funds are a relatively affordable investment option. You can start investing in mutual funds with a small amount of money. Types of mutual funds. There are many different types of mutual funds available, each with its own unique investment objective. Here are a few of the most common types of mutual funds. Equity funds. Equity funds invest in stocks. Equity funds are typically more volatile than other types of mutual funds, but they also have the potential to generate higher returns. Debt funds. Debt funds invest in bonds. Debt funds are generally less volatile than equity funds, but they also have the potential to generate lower returns. Hybrid funds. Hybrid funds invest in a mix of stocks and bonds. Hybrid funds offer a balance of risk and return. Money market funds. Money market funds invest in short-term debt securities, such as certificates of deposit and treasury bills. Money market funds are the least volatile type of mutual fund, but they also have the potential to generate the lowest returns. How to choose mutual funds. When choosing mutual funds, it's important to consider your investment goals and risk tolerance. You should also look at the fund's past performance and fees. Here are a few tips for choosing mutual funds. Consider your investment goals. What are you saving for? Retirement? Your child's education? Once you know your investment goals, you can choose mutual funds that are aligned with those goals. Assess your risk tolerance. How much risk are you comfortable with? Mutual funds come in a variety of risk levels. If you're a beginner, it's best to start with lower risk funds. Look at the fund's past performance. While past performance is not a guarantee of future results, it can give you an idea of how the fund has performed in the past. Compare fees. Mutual funds charge fees to cover the costs of managing the fund. It's important to compare the fees of different funds before you invest. Investing in mutual funds. Once you've chosen the mutual funds you want to invest in, you can open an account with a mutual fund company. You can invest in mutual funds through a variety of channels, including online, over the phone, or through a financial advisor. Additional tips for beginners. Start small. You don't need to invest a lot of money to get started with mutual funds. You can start investing with as little as rupees 100. Invest regularly. Even if you can only invest a small amount each month, it will add up over time. Reinvest your earnings. When your mutual funds generate earnings, reinvest those earnings to buy more units of the fund. This will help your money grow faster. Mutual funds are a great way to invest in the stock market, even if you're a beginner. They offer a variety of benefits, including diversification, professional management, liquidity, and affordability. When choosing mutual funds, it's important to consider your investment goals and risk tolerance. You should also look at the fund's past performance and fees. Need some help along the way. Subscribe now to Bharat Share Bazaar for more financial insights and updates. I also encourage